Well, Greece's debt woes continue. Just as the country is about to head into a 24-hour general strike tomorrow, news has surfaced the Greek government used currency swaps with the help of Goldman Sachs to reduce the size of its debt. Will the crisis of confidence be too much for the country to manage? Weighing in on this week's Buzz, we're joined by Brian Milner. He's a business columnist at the Globe and Mail. And in New York, we have Peter Schiff. He is president and chief global strategist with Euro-Pacific Capital. Well, welcome to you both. Peter, I'm going to start with you on this one. Goldman Sachs has conceded that it's used these complex currency swaps with the kind of effect of trimming Greece's national debt. Now, of course, this was back in 2001, and Goldman Sachs says they did nothing inappropriate. First off, I just want to get your reaction to these kinds of operations. What's your sense? Did they do anything inappropriate or not?
It sounds like they're trying to use gimmicks to try to get around making the tough political choices necessary to rein in these deficits, which is cutting back on government spending, cutting back on the lavish pay and pensions that it promises its workers, and just reducing the size of government. That's what has to happen in Greece, and I'm hoping that they don't get a bailout from the European Union, that instead they're forced to make these cuts for fear of retaliation or having to leave the Eurozone or leave the Euro.
You know, Brian, before we get to those more macro issues, what about your view on the Goldman situation? Was Goldman just trying to help Greece comply with converting its debt into the euro through these swaps, or was it trying to hide debt, do you think?
No, it was clearly a mechanism to hide what they actually had on their books, and they did it for the banks. They did it for anybody who would pay them the high fees they earned. I mean, their own executive went before that tribunal in London the other day and admitted that it was legal, but it probably wasn't the right thing to do.
This is Jerry Corrigan, the former president of the New York Fed.
Yeah, exactly. Who should know better. The fact is that the Greeks lied to the European Union, and the current government is now saying the Union should not have let this government lie to them. They should have forced their hand. And they should have been more stringent about it. But the fact is that they really were looking the other way.
Okay, Peter, to you, just to go back to these operations once again, in terms of what Goldman Sachs was doing on Greece's behalf, do you see this as the thin edge of the wedge? Do you expect, could there possibly be more examples of this kind of operations coming out?
That's the edge that Goldman operates on, and I wish, they had ultimately had to suffer for what they had done. If it wasn't for the actions of the United States government and of the Federal Reserve, I'm confident Goldman Sachs would have gone bankrupt, and that would have been, their just desserts. Unfortunately, taxpayers ended up bailing them out, and they continue to make money, pursuing those same old tricks.
But Brian, I mean, they have a big thing on their website now explaining what they did. They're trying to put their own spin on it. I mean, does anybody buy it?
I don't think so. But I mean, the client comes to you with a problem. I've got all this debt. I've got to have cleaner books, and they move it off balance sheet. All the banks were doing this as well. They create swaps that really turned out to be loans in disguise. And suddenly Greece qualifies to join the Eurozone. I mean, the Europeans should have been a lot more careful. They should have sent in their own auditors. Clearly now they're doing it, but it's like, closing the door after the horse has left. I mean, it's not just Greece that did this. We should mention that Italy did it, Portugal. All of the high-debt countries had to do something because these requirements were fairly stringent, and then suddenly they all seem to be able to meet them.
Remember, though, the United States does all these tricks, too. We keep all kinds of stuff off the books. We've got all kinds of debts that the U.S. government guarantees. We've got agency debt. We've got contingency liabilities. We're not honest about how much money we owe either. I mean, we make Greece look like Boy Scouts.
So who's going to call everybody to account on this? I mean, we can talk about it till we're blue in the face, right? Peter?
Well, eventually the creditors are going to call us to account. They're not going to be buying our debt. I mean, either they're not going to buy, Greek debt. They're certainly not going to buy U.S. debt. I mean, one of the things that we talk about is the fact that Greece can't print money as if that's some kind of a negative. The fact that we can try to print our way out of debt, that is a bigger problem for our creditors. And at some point, they're going to be cognizant of that, and they're not going to buy our debt, they're not going to buy our currency, and that's when the U.S. economy is going to have to really pay for the sins of the past and really come to grips with the size of our problems and hopefully do the right thing eventually.
Okay, well, we're going to get to the U.S. economy in a sec, but I just want to get back to Greece, and in particular, you mentioned, Peter, that you're hoping that they don't get bailed out, but couldn't that potentially precipitate another kind of Lehman? You know, in retrospect, everybody's saying that the big mistake was that Lehman wasn't bailed out.
No, that was the only thing our government did right, is let Lehman fail. I wish they would have let more firms fail. Look, if Greece goes bankrupt, you know, it's not going to be that big an event. I don't know that they're going to pay zero on the dollar. Maybe they'll have a restructuring. My personal feeling is that if push came to shove, in order to avoid the embarrassment of a default, that the Greek government might actually do the right things necessary to avoid it, and they might cut government spending, which would be the best thing for Greece and the best thing for Europe in general. What the Euro region cannot risk is the moral hazards of a Greek bailout. They undermine their entire system, their currency. They will encourage more reckless behavior on the part of other governments, and you're going to get a lot of resentment in countries like Germany. You know, they're not going to want to be held responsible for the extravagances of other countries, and that's going to force their politicians. You're going to have a race to the bottom. Everybody's going to try to create more and more debt because they're going to try to push the consequences on other members. So they've got to hold firm, and I think if they do, it's going to benefit everybody over there, including the euro.
Brian, do you think
Although in the short run, I mean, the euro might weaken if Greek failed, but in the long run, it'll be fine.
Do you think Greece should be cut loose?
No, I don't. I don't think they can afford it because of that domino effect. I think it's not the same as Lehman, though. I mean, the situation is different. We're talking this time about a sovereign borrower. And in the Greek situation, I mean, they can cut their budget to shreds and they still won't be able to meet their debt obligations. I mean, their debt is already 5 times what Russia's was when it defaulted in '98. It's higher than Argentina's was in any of its debt defaults. So what they have to do,
let them work out a restructuring agreement with the creditors. I mean, let the creditors take some kind of haircut.
That's exactly what they'll do. They'll go to the bondholders, which is what Ecuador did not long ago, and they'll say, look, we're only going to give you X cents on the dollar, but that's better than nothing. And then they need the IMF or the EU in there to make sure that this fiscal situation, the domestic situation, is fixed.
Okay, well,
and it's better than printing money and giving people back worthless money. I mean, it's better to get something on the dollar. But what we have to impose discipline on lenders. They have to know that they have to be responsible when they make loans, whether it's to corporations or governments. And if entities are in too much debt, you don't loan them any money.
Okay, well,
if you do, you risk losing.
Okay, we're going to take a brief break, and we'll be right back after this. Stay tuned.
Peter Schiff of Euro Pacific Capital in New York, and with us in studio, Brian Milner, business columnist at the Globe and Mail. Peter, I want to follow up on something you said earlier about the U.S. debt in comparison to what's happening in Greece and the printing of money and currencies and so forth. I mean, if that's a problem, I mean, what currency do you buy in the world? It's all a relative game. I mean, you're talking about the U.S. dollar there, the euro, which is
that's what it is.
People want to buy the euro. What are we going to end up with? The New Zealand kiwi?
It's currency triage. You know, you find the currencies that have the least problems to the extent that you want to hold currencies. I want to make sure that I also hold real money. You know, we didn't buy any Greek government bonds. I do own some German government bonds. And, you know, when I bought German government bonds, I got a lower yield than the people who bought Greek government bonds. I didn't want the Greek bonds because they were too risky. The people that bought those bonds and got those higher yields, they need to suffer now that their bets went bad. It can't be heads they win, tails everybody else loses.
But a lot of people seem to still take solace from the U.S. dollar. It's still relatively strong, Peter. What do you say about that?
It's only strong because people are buying it because they fear everything else. But the minute they realize what they're buying is even worse fundamentally than what they're selling, they'll stop doing it. If you look at our debt to GDP right now, it's about 90%. But that doesn't count any of the agency debt like Freddie and Fannie. When you lump that in there, our debt situation is already worse than Greece. And then when you take a look at all the off-budget things, you look at all the contingency liabilities, like in Social Security or Medicare, it is off the charts.
So, Brian, you were making a point in the commercial break about the Chinese currency.
Well, the Chinese currency is it's not a matter of when it will be revalued upward. It's not a matter of if. It's a matter of when.
When, yes.
Yeah, and that's going to happen, and that will change things. The other thing that they need to do, of course, is have it traded on the open markets. And then I think you will see people saying, wow, this currency is available. It's a stronger currency than anything we're in right now.
Because of the fundamentals in the Chinese economy?
Exactly.
Yeah,
But the
we own a
Chinese
lot
have
of securities. For that reason, I own a lot of stocks in mainland China, in Hong Kong, where all of their revenues are coming in RMB. And I know at some point when China, lets its currency go up, now I wouldn't be surprised to see the RMB increase by a factor of 5. Over a relatively short period of time, which would dramatically increase the purchasing power of Chinese consumers, and it would change the global dynamic, where China would start consuming their own production, they would start investing their own savings in their own country, rather than making them available to finance American consumption.
Yeah, but Peter, you're talking about all this off-balance sheet debt and this lack of transparency. I mean, China is awful. I mean, yes, it has huge reserves, but there's a lot of lack of transparency in China too.
But there's not as much reason to be transparent because they don't have any debt. The Chinese government owes nothing. And you don't have all the contingency liabilities. China doesn't have Social Security. There is not a giant, huge generation of Chinese who think they're going to retire, on somebody else's wages. You don't have that giant Ponzi scheme over there. So you have the demographics. You have a much smaller government when it comes to how it interferes with entrepreneurs in their everyday life. So, there isn't as much to worry about. In America, we've had generations of this going on. We have a huge population of people on the government dole. There's statistics that are coming out now that shows that people working for the federal government, when you count their benefits, they're making twice as much as people working in the private sector.
Okay, let's talk about something.
Dry.
Let's change tack here, and let's talk about another Asian-based situation, which also has a transparency component to it. Toyota. Brian, the president's going to appear before Congress tomorrow. Some bullets coming out. Is he going to be able to make the case that he's been up front and they're en route to solving things?
Well, he's certainly going to try. They're trying desperately. I mean, they took out full-page ad in the Wall Street Journal today. They're making this road push in Canada. All their executives are going across Canada to tell people how much they care about the consumer. The problem with Toyota is that it's been an incredibly arrogant company for a very long time. And there's no question that as good as its products have been, they were starting to cut corners to increase those volumes. And according to what's come out in the news, they took a lot of chances. They did not do the recalls they were supposed to have done on a timely fashion. We're going to find out more about this. I don't think it should be a criminal case at this point. I think the civil lawsuit system in the States will take care of this.
Even though there are some subpoenas.
Even though there are, yes. And I can tell you, I once interviewed this Toyota's grandfather, I think, when they started up in Canada, and they had this British translator from Oxford in this clipped accent, and I started asking about labor issues with the CAW being fairly militant, and would Toyota allow them in, and his reply was, do you realize the time for your interview is very short?
Peter, to you, do you think that Toyota is going to be able to recover from all of this?
Well, most likely. I mean, obviously they have a serious PR problem on their hands. I don't like the fact that the U.S. government tries to get involved with hearings. It amounts to nothing more than political theater and grandstanding, and the politicians like to stand up and act like, they're the ones that care about consumers, and they really just care about their own reelection. So I wish they would stay out. And, it doesn't send a great message to start beating up on companies that are doing business in this country. It kind of scares them away. If they did do anything wrong, I have confidence that that'll come out, in the legal system. We don't need to get the government involved.
Quickly to finish up, Brian, can they recover from this?
Oh, definitely. It's going to take a little while, but they will get back. We've seen worse cases than this come back. Their products are still pretty solid, and once they fix the technical problems, the computer problems, they will be back.
Okay. Well, thank you very much, both of you, for joining us today.
I thought we were going to talk about the stimulus.
Unfortunately, we ran out of time. We'll have you back for that, though, I promise.
And what stimulating?
You were stimulating.
We don't need a third one. We didn't need the first two.
On that note, okay, thanks very much. That's Brian Milner. He's the business columnist at the Globe and Mail, and we were also joined by Peter Schiff. He's the president and chief strategist with Euro Pacific Capital. And that's it for Midday Markets. If you have any questions or comments, please email us at middaymarkets@bnn.ca.
And next on Headline, how much does good design matter when it comes to selling a product? Hear from design guru Don Norman after the break.